Across the United States, coastal flood warnings are becoming more frequent. Rising seas, stronger storms, and unpredictable weather patterns are no longer rare events. They're part of everyday life for millions of Americans. And while the images of flooded neighborhoods capture headlines, there's another story quietly unfolding in the background: skyrocketing insurance premiums. If you own a home, rent property near the coast, or even invest in real estate, these flood warnings are already affecting your wallet, and it's only going to get more expensive. But there are practical steps you can take to protect yourself financially. So why are insurance premiums rising so dramatically in coastal areas? The answer is simple, but the implications are huge. Insurance companies are in the business of managing risk. The more risk they see, the more they charge. And right now, the data is screaming one word: flooding. What used to be considered a once-in-100-years event now seems to happen every few years. Coastal flood warnings have nearly doubled in some regions over the past decade. Even small increases in sea levels can turn ordinary rainstorms into destructive floods. And let's not forget the financial toll. Flooding costs the U.S. economy hundreds of billions of dollars every single year. Insurance companies can't absorb all that. They pass it back to you through higher premiums. If your home is near a floodplain, a river, or the coast, chances are your policy costs have already crept up. In some cases, insurers are pulling out of entire states, leaving homeowners scrambling for alternatives. Now, let's talk about what this means for everyday people. For homeowners, rising premiums mean higher monthly costs, especially if insurance is tied into the mortgage escrow. For some, it's the difference between comfortably affording their home or facing foreclosure. For renters, landlords are passing along higher insurance costs through rent increases. So even if you don't own property, you're still paying for climate risk, whether you realize it or not. And for real estate investors, entire portfolios in coastal states are suddenly looking riskier. Properties are harder to insure, harder to finance, and may even lose long-term value. Flooding isn't just a natural disaster, it's a financial one. Ignoring it could leave you underwater, both literally and financially. So what can you do about it? There are several smart moves you can make right now. First, shop around for policies. Don't assume your current insurer is the only option. Compare quotes from national providers and smaller regional companies. Sometimes, newer players in the market offer competitive flood coverage where bigger insurers won't. Second, understand the National Flood Insurance Program, also known as NFIP. This government-backed option provides flood insurance where private companies refuse. It may not always be the cheapest, but it's better than being completely uninsured. Third, consider raising your deductible strategically. If you can afford a higher deductible, you can often lower your monthly premium. Just make sure you have an emergency fund ready to cover that deductible in case disaster strikes. Fourth, invest in home resilience. This is where financial planning meets smart engineering. Elevating your utilities, sealing basements, installing sump pumps, or even raising the foundation of your home can reduce risk, and in many cases, lower premiums. Some states even offer tax incentives or grants to help cover the cost of floodproofing. And fifth, consider relocation or diversification. This one is tough but real. If your property is in a severe flood zone, the long-term financial math may not add up. In some cases, selling and reinvesting in lower-risk areas is the most financially sound move. For investors, diversifying away from climate-vulnerable regions is essential. The bigger lesson here goes beyond just flooding. We're living in an age where climate risks are directly tied to financial security. Insurance, credit, mortgages, even property values, they're no longer separate from climate change. Whether you're a homeowner, a renter, or an investor, factoring climate risk into your financial planning is now essential. The sooner you adapt, the stronger your financial future will be. Coastal flood warnings aren't just about water levels. They're about rising costs, shrinking options, and difficult financial decisions. But by taking action today, shopping smarter, building resilience, and planning ahead, you can stay one step ahead of the storm. If you found this video helpful, make sure to hit that like button, subscribe for more insights on finance, investing, and credit, and let me know in the comments. Are you seeing higher insurance premiums where you live? Remember this. When it comes to your money and your future, it's always better to prepare than to repair.